Hello, and welcome back to another daily recap for Wednesday, August 14, 2024. It's about 8:08 a.m. Eastern. I'm Sam Morton. The levels on the SPY chart this morning are kind of spread apart. There is an area here that they have to get through to remain bullish. Anything can happen, of course, but there's some overhead resistance in this area, and the other levels are important, except for perhaps this lighter blue line at 539.25. It may be less important. It really depends on how and when or if the SPY gets down there today. They've been bullish for a while, as you know, but they're going to find a top at some point. So we'll come back to this chart and analyze the trades taken in the E-minis based on what the SPY does. And we'll do that after the market closes, after the closing bell this afternoon. Catch you on the other side. And we're back. A little late getting this recap video made. I had an event after work that ran late. Today was good if you knew what you were doing. In the email that was sent out this morning with the levels, I mentioned that they've been climbing a lot over the past week or so, but they're going to run into some overhead resistance at some point. Under normal market conditions, the area between this 543.04 and 544.24, maybe a little higher, should provide some resistance. That was exactly what I put in the email. So what do? After opening toward the bottom of this area and dropping right out of the chute, they climbed back up, and sure enough, when they got to this area and slightly above, they hit overhead resistance and fell back down. I was expecting more of a reaction actually, but it was enough for me to pull a decent number of points. So how would you have traded these levels playing by the rules? So let's talk about that. So these levels now have the 5-cent buffer applied. It's toward price as price was coming up into it. So the first trade would have been around here. Let's see, like 11:30 or so in the morning Eastern, the first time the SPY came up into this level. The first time they hit it over here right after the opening bell doesn't count because it was too early. After 15 minutes, you start looking for trades. So, but this would not have been triggered because of a type of consolidation that occurred, and it breaks a rule I have. I call it the 20-20 rule. So basically, if price comes up within 20 cents of a level, pulls away, kind of hovers underneath that within 20 cents or around that 20-cent area for at least 20 minutes, hence the name 20-20, then you should consider not taking that level, because essentially this consolidation is probably building up energy to push through the level, and the market is essentially telling you that the level is probably wrong, like it was somewhere down here, because you can see here after the fact that that was level. So if this is, they can't get through, they're busting up, they're hitting the underside of something and they can't get through it, then the market's essentially telling you that the level is probably a little bit lower. So in this case, you don't want to take the short trade here. So that's off the table. So the first official trade would have been a short trade up at 544.19. Yeah, they came up here within that 20 cents, but they got back up to it soon enough. So a short trade here would have been out of the money a little bit, but there was some stuff going on up here. There was a trend line I had identified from some other reasons that was up here. I actually ended up scaling in and selling one more up here, and I was kind of loaded up on contracts. We can talk about that later. So there was a lot of good reasons to expect some type of pullback. Like I said, I thought they'd come back farther. But anyway, a short trade here would have netted you the first base hit. Now you got this recycle trade on the hands, or at least an opportunity to take a recycle. But do you want to take it to this first level, which was, too high in this case? So I'll just adjust this level and show you what it should have looked like, or what the revised level would look like if you chose to take a recycle trade. So somewhere around here, because the market told you this point that this was an area they couldn't get through. There was a resistance here for some reason. They got above. So if they're coming back down, you want to take a long trade here. Just treat it exactly the same. No need to adjust it because that's the level. Then this is your second base hit. They would have given you a base hit after waiting this out. Yeah, they got below, but there were no closes below the fumble threshold this would have created. That would have generated a fumble. So 2 base hits. So not too bad. We'll take a look at my trades now. So you can see at this point, I have 3 limit orders on the board over here to start selling. I was willing to sell in this area, and I'll start playing this. And you can see in a minute when they start consolidating, I move this lower limit order above. So I'm going to, if they get up here, I would sell 3. But, I was expecting a little bit more of a reaction, lower down. But I end up selling all the way up here. I end up loading up with 5 contracts. I'll scrub ahead here a little bit. So here's the time. So I moved that order about right. I'll just let you watch this. I'm not sure. It was pretty close to this point when they could not get up there. It's like, okay, something's going on here. they're essentially developing a new level. This is that consolidation that I don't like to see under level. So I'm going to sell a little higher. And so you can start seeing these orders get filled, and they never pulled down. So I kept just, adjusting on a base. I was looking for a base hit on one contract, and then they went up. I'm short 2, looking for a base hit on that. So I'm getting to the top of this kind of range area. This is, bigger than a typical range. That's why I didn't make these lines dashed this morning, but it effectively is plus what was going on above this, like I kind of predicted in the morning. So now I'm short 3. They get to the top. I sell another one. You can see where I'm at, where I end up in a position of 4 contracts short. There we go. And so when they start getting up here, I've kind of going all in at this point. Not really all in. I kind of know where my limit is, but felt really good about seeing some overhead resistance here. And I figured, well, they're just kind of faking people out, faking traders out. And there's a trend line that they were butting up against at this point. So I sold one more. So I was short 5. So essentially I had a 5 contract position, and they came down. So move ahead here and let you see what happened. So I got 3 off. I'm planning to trail 2, the remaining 2, and I did. So you can just watch this. There's the first, a little bit over 1,000. I'm trailing 2 down. They came down some, but like I said, I was expecting quite a bit more. Eventually, I put a target down here. There's my target. And just to take 1 off, thought I can trail the other last remaining contract even more and scale out. But they went up here and stopped me out at the 1450. So with a 5 contract position, it was really a little bit less than 10 points, 9 point something, 9.75 or so, because it was around $2,400, $2,450 or something like that. So pretty good. I'll let you watch this. I think there we go. That's it pretty much. So that whole area is now done for the day for me. And I treated this, quite a bit differently than, playing by the rules you would have, because I just essentially wanted to scale in this whole area and expected them to come all the way down here and thought I could have a nice big home run day with, I don't know, $8,000-9,000 or something with multiple contracts. But I'm not complaining. I'm happy with what I got. First log is the playing by the rules log. Here's your 2 base hits. You can read the notes. Not triggered because of the consolidation. Got a base hit on level 4. They came back down into level 3, and you would have had a base on the recycle of that revised level as we discussed. So 8 points if you were strictly playing by the rules. And what I did was quite a bit different. So it was 9 3/4 points across 5 contracts that I scaled in. And so it was 24.45. That was the exact before commissions profit for the day. So that's pretty much it for today. Sorry this video is so late. Tomorrow morning, before the opening bell, I'll have levels again and send them out to whoever is on my list, and we'll do this all over again. Thanks. Have a great rest of your day.